Hi everybody, Marco Carbajo here from businesscreditblogger.com. Today's video we are going to talk about equipment financing, how it works and how to apply. So if you're looking for equipment for your business, even if you're a startup or existing company, this is the video for you. We're going to go over everything about equipment financing and actually how to acquire equipment from 10,000 to 5 million in equipment. So let's get started. Okay, so first and foremost, what is exactly equipment financing? It's a type of business loan that's used exclusively for the purpose of purchasing equipment. So it's a lender that's buying the equipment, basically providing the money to the vendor or private seller that you're trying to buy the equipment from. They're lending it just for that equipment. Okay, so the beauty of equipment financing, though, is the fact that the equipment that you're looking to get for your business serves as collateral for the lender. Okay, so the requirements are not as difficult compared to unsecured funding. Okay, because obviously that's more credit based. With equipment, when you have collateral, which is the equipment itself, lenders obviously are much more flexible there. So it's easier to qualify for this type of financing as a business. You can qualify with credit scores as low as 550. Okay, so let's talk about some of the things involved with equipment financing. There's just three parties involved. There's the lender, who's lending the money to buy the equipment. Then there's the borrower, which is you, the business. And then there's the seller, who you purchasing the equipment from. This can be a vendor, this could be a private seller. And just so you know, there's certain types of sellers, vendors out there that actually have their own in-house financing divisions. Like example, major company is Caterpillar. Okay, they have their own equipment financing division. So they finance their own equipment to make it easier for construction companies, etc., to get their equipment. Okay, so but many types of vendors that you're trying to get equipment financing for don't have their own in-house financing, and that's where we come in. Okay, so what are the benefits of equipment financing? Well, first and foremost, you can get 10,000 to up to 5 million in equipment for your business, and there's so many different types of equipment you can finance, which I'm going to get into in a minute. So this allows you to increase your purchasing power. So what that means basically is, let's say you need 100,000 in equipment for your business. Let's say you're opening up a restaurant and you need a whole bunch of equipment for your restaurant. Is it easier to get 100,000 in cash or credit lines for the business to buy the restaurant equipment? Or is it easier to get 100,000 in equipment financing to acquire all that equipment for you? Obviously, it's the latter, because all that equipment is going to be secured for the lender. That's collateral. Okay, big difference. You're going unsecured funding or secured funding. Equipment financing is a secured type of funding. Now, you get up to 100% financing, so that's another major benefit. So you don't have to come up with a large sum of money down, or they're only willing to finance, let's say 70% of the equipment that you're trying to buy. 100% financing for you. And it's instant collateral, like I said. So if you need equipment and you're trying to get a loan or money to buy the equipment, equipment financing is a great alternative for you, because that equipment serves as collateral for the lender. Fixed monthly payments, so it doesn't fluctuate on payments. It's a fixed schedule of month to month to get that equipment loan. This preserves your credit lines. This is huge, because we have a lot of business owners that come to us and they're trying to get, let's say, business credit card funding. They want revolving lines of credit, or they want a cash loan. And we always ask, what's the main purpose of the funds? Why are you trying to raise capital? And many of them are trying to get equipment, or they're trying to buy another truck to expand their fleet of trucks, or they're trying to open up a salon and they're trying to buy salon equipment, or etc. So the unique part about that is, instead of using your credit lines to buy that equipment, you can finance the equipment and preserve your access to credit lines. Okay, so that's huge. It's sometimes better to preserve those credit lines for other things rather than using them to buy equipment outright. And also, you could serve your cash. So instead of let's say you have a lump sum of cash and you're going to buy equipment, well, instead of liquidating and using up your cash to buy that equipment, why not finance that equipment and hold on to your cash? Okay, this also helps you build business credit. So when you get equipment financing with our lenders, they report to the Business Credit Bureau, so that business loan for your equipment is going to build up your business credit as well. No large upfront costs. Typically, you're going to require a first month and last month's payments to close the equipment finance loan. That's typically what lenders require. So if your monthly payment, let's say, is $500 a month for the equipment, for all the equipment you're trying to buy, then they're going to want first and last month's payment up front to close the deal. So you're looking at about $1,000 there. That's just an example. And then there's usually a doc filing fee of a couple $100. But that's it. So there's no large amounts of money you have to come up to close your equipment financing loan. Now, this is huge too, is potential tax advantages. So there's difference between buying your equipment in cash versus financing your equipment. So check out Section 179 of the tax code, because you can actually write off up to 100% of your equipment purchase, even if you finance the equipment. So that's really beneficial. Of course, the tax codes changes all the time, but Section 179 is really strong. And then you also have depreciation. Those are other things. So you want to check with your accountant, your CPA, and ask questions about financing your business equipment. Okay, so let's talk about another unique benefit for equipment financing is, which you may not be aware of, is you can actually qualify for 25% of the equipment value for soft costs. So what exactly does that mean? Let's say you're trying to buy $100,000 worth of equipment, and the lender is going to finance 100% of that, $100,000. Well, in addition to that $100,000, you could get up to an additional 25% of the value of that equipment from that lender to cover any additional soft costs. Let's say you have to buy paint or you have to buy materials in addition to getting the equipment. Okay, so that's additional capital for you on top of the equipment itself. So that's something that wraps into that equipment loan, which is really beneficial. Okay, so that's you can get up to 25% in additional funding with that equipment loan. Now, what should you do? Okay, this sounds interesting to you. You know you need equipment to launch your business, or let's say you want to scale your business and you need additional equipment, or let's say you have a truck or two trucks and you want to get a third and fourth truck to expand your fleet. You know you can generate more revenues if you expand your business, or let's say you need to replace equipment or whatever it is. The first thing you need to do is make a list. What equipment do you need for your business? That's the most important thing, because we have people come to us and say, well, I need to get this, and this. I'm looking for funding for equipment. Well, what exactly do you need? What type of equipment? So you have to be very detailed on the equipment you need to get to whatever it is you're trying to do for your business. The second is who are you getting your equipment from? Preparation is so important when you come to us for funding. So you have to know what you need. So make a list, what equipment you need. It might be just one piece of equipment. You might need just a new truck to add onto your fleet for your trucking company, or you might need some new equipment for let's say your gym, and you're opening up a gym and you need a couple of pieces of equipment, etc. Find out what you need, and then you want to identify the vendor or the private seller you're going to buy that equipment from. Okay, so once you identify it, then what's the next thing you need to do? Go to that vendor and get a quote for exactly what you want to buy. And have this before you come to us for financing. That's what lenders need. They're going to need to see an equipment quote. You can't just say, I need equipment, and you don't know. Because remember, the lender is paying the vendor or the private seller. They're not paying you the money. They're paying the vendor for the equipment, and the equipment's getting delivered to you. Okay, so we need a quote from the vendor or the private seller that details what the equipment is, model number, serial number. So get that quote. It could be a bill of sale, invoice, whatever it is. That's what we need. And make sure you cover what exactly you need for your business. So, and the most important thing is you have to forecast your revenue and growth. So this is important for you as a business, because when you're saying you need this equipment, you have to also determine, once you get this equipment, what are you projecting you're going to be able to do as a business? What additional revenues is this new equipment going to generate for us? Or how is this going to help us scale our business? Or how is this going to increase productivity for our business? Whatever it is, you have to forecast your revenue and growth, so that allows you to kind of see, okay, this is how much this equipment costs, but our return on this investment is going to be this. Okay, so that's very, very important. Now, once you've done that, let me give you some examples because you're probably wondering what type of equipment can I get financing for? So this kind of breaks down some of the main types of equipment you can finance with equipment financing. Obviously, you'll see in office, there's everything from computers, software, copiers, furniture, laptops, printers, fixtures, fax machines, signage. If you're in the medical or dental field, there's lots of equipment. Those are expensive pieces of equipment, from ultrasound to x-ray, hospital beds, wheelchairs, MRI, CT scans, etc. CT equipment. Now security, there's obviously control systems, security systems, safes. For your communication business, you'll see there's communication equipment here. Restaurant business, obviously there's lots of different components to running a restaurant. Furniture, stoves, ovens, ice machines. And remember, you may already have a restaurant and you need to replace some equipment. You need to upgrade your equipment. Or let's say you have some ovens and they're too small and you need to have bigger ovens. So these are just all the things you need that you got to take into consideration when you're trying to get equipment financing. In autos, you may need some additional trucks, food buses, vehicle maintenance, automotive tests, wheel alignment. They have industrial, there's bulldozers, cranes, forklifts, lawn mowers if you have a landscaping company. There's lots of tools you need there. And then, of course, there's other types of equipment you can finance as a business. Golf carts, fitness equipment if you're owning in a gym or a beauty salon. There's lots of equipment for beauty salons that you need. Vending machines, janitorial, arcade equipment if you're running an arcade, etc. So these are just a snapshot of all the different types of equipment you can get, you can finance with equipment financing. So once you made a list, you found out you got let's say an equipment quote, what are your options? Okay, first you can use your own cash. You can buy the equipment. That's not a problem. You don't have to financing at all if you have the cash in the bank. You could do that, obviously. The other thing is you could use your available credit lines that you have. So let's say you have your own, let's say you have credit available to you, whether it's personal lines of credit or you have some personal credit cards, or you have business lines of credit, etc., or you have business credit cards and you want to purchase the equipment doing that, you can do that. That's fine, okay? Or you can use an equipment financing lender, okay? That's your third option. The question I want to ask for you is, what if you want to conserve your cash? Well, let's say the equipment you're wanting to buy, let's say you have $20K in the bank and the equipment costs $15K. Do you want to use all $15K and you only have $5K left of your cash? Okay, or would you rather finance it, get all the tax benefits, etc., associated with financing your equipment, you get the write-offs, and you're still conserving all your cash, you have money in the bank. Okay, so if you want to conserve your cash, obviously option one is not an option. But what if you want to preserve your available credit? So this is the thing that you want to be careful or take into consideration as a business is, let's say you have $50,000 in credit available for your business in lines of credit or revolving lines or whatever, $50,000. And you need, let's say, $30,000 in new equipment. And your instant knee-jerk reaction is, okay, I got the credit available for my business. Let me just put it on the credit cards for the business, or let me use my line of credit and I'll buy this equipment. Okay, so you had $50,000. Now that $30,000 is now new debt. So you only now have $20,000 of credit available on all your credit lines, let's just say, okay? The other option is, what if you don't even touch your credit lines and you just finance that equipment with an equipment financing lender and you still have your $50,000 in available credit, okay? So that's something you want to weigh in. Do I want to tap into my access to working capital, my revolving credit lines, or would I rather just finance it with an equipment lender? So that's another thing. If you want to preserve your available credit, option two is not an option. So 3 is you can use an equipment financing lender that will finance that equipment, and that preserves your cash and it preserves your available credty. Okay, so let's talk about the requirements. Now, there's some minimum and ideal. So this is a really quick breakdown for you. They do go as low as 550 credit scores, but if you have a 550 FICO score, I mean, don't expect to qualify for more than $10,000 in equipment financing. I mean, because that's a low credit score. Yes, they're going to check your credit. Time in business is a startup. They do accept startups. Adjusted growth revenues, if you're a startup, is 0, obviously. If you had a BK, it has to be discharged. If you have any judgments or liens, then you have to at least be in a payment plan for those. And if you want to use a credit partner, then your credit partner has to have a 660 or higher credit score. And that's where a 20% down payment will be required if you use a credit partner in equipment financing. Okay. Like I said, this is a secured financing product because your collateral is the equipment that you're getting. Now, industries are important with equipment financing. Funding amounts, like I said, $5,000 to $10,000 on a 550 credit score. I wouldn't suggest going through equipment financing if all you need is 5,000 equipment. You're better off trying to get like maybe an unsecured loan or use it on credit cards or use your own cash for such a small amount. But the other ideal is 650 or higher, 24 months in business, doing 10,000 a month of revenue. Obviously, those are more your preferred type of category you want to be in. And that's where you can get much more capital for equipment. Obviously, if you're in the 650 or higher credit score range, you can get up to 75,000 or more if you're, let's say, a 700 credit score range, which we're going to get into in a second, on what to expect based on your credit score. Age of business does matter. If you're 2 years in business, that's much better than if you're a startup. Okay. Now let's talk about how much can you qualify for. So if you're in the 550 credit score range as a startup, then you can expect about 10K. That's kind of what you're looking at. Let's say you have a 550 credit score range, but you have an existing business. You have good revenues as a business. You just have very tough credit. Then obviously you may be able to qualify for higher amounts because you have a business that's generating revenue. Okay, so don't look at these as set in stone, but this is kind of what we see with the approvals, with the amounts. If you're in the 590 to 650 credit score, expect 10 to 30,000 you can get in equipment financing. 650, 700, up to 75,000 in equipment financing, and if you're in the 700 plus range, 125,000 or more in financing. Okay, so this is your personal credit score range. Obviously, business credit scores, you have a business credit file established, that's a plus. It's just more data for a lender to look at on how your company manages its finances, etc. Now, let's talk about the PG, the personal guarantor. Most equipment lenders, when it comes to equipment, they do require a personal guarantor. What is a personal guarantor? That means you're basically co-signing for your company. So if the business defaults, then you have to make good on that loan that the business defaulted on. That's what a personal guarantor is. The problem most people think is if you PG something, then it means it reports to your personal credit. With business credit card funding like we do, even though you PG them, those business credit cards don't show up on your personal credit, only if you default. So same thing here. You are the personal guarantor. It has nothing to do with credit reporting. This is just a requirement from most equipment lenders. But there are exceptions. The first exception is the 555 rule. What does that mean? An equipment lender will not require a personal guarantee if you meet the 555 rule. That's 5 years in business, that's 5 employees or more, and 5 million in revenue or more. Okay, so obviously if you meet that rule, you're in a well-established company, very little risk. So to the lender, no PG. Another exception is if you have comparable no PGs. What does that mean? Let's say you're trying to get 30,000 in equipment financing from a lender, from our lender, and we're trying to do a review for you, but you don't want to supply a PG. The lender's going to know, well, what other type of comparable credit do you have with that you didn't have to provide a PG as a business? Well, let's say you have a vendor line of credit that's 30,000 with that you supplied no PG to. That's a comparable no PG. So in that case, they may waive the PG with this equipment financing loan. Okay, so you have to have a comparable PG, PG. And let's say if you only have a $1,000 vendor credit line and you're trying to get 50,000 in equipment and no PG, but the only comparable no PG you have is a $1,000 credit line with a vendor. That's not comparable, okay? So just understand that. Now, nonprofits don't have to provide PGs, and municipalities do not have to provide PGs for equipment financing. Okay, so let's get into pre-qualification. What's required for you to see if you qualify? Remember, make sure you've done all those things. You've made a list. you found the vendor or private seller you're going to get the equipment for, and you need to have that equipment quote, okay? Because we're going to ask for it. We want it, all right? So if the equipment you're trying to get is under $75,000, then we need the equipment quote to do a pre-qual. We need a copy of your personal credit report. You can go to triadcreditreport.com. It only costs you $1, and that's not a hard inquiry because you're ordering your own credit report. So this is just for a review, okay? So when you order your own personal credit report, that's called soft inquiry, so there's no impact on your credit. So this is just for pre-qual to see if you qualify. We need 4 months of business bank statements. So if you're an existing business, and let's say you've been in business 4 months, we need to see 4 months of bank statements. If you're a brand new startup, obviously you do not have business bank statements because you don't have revenues yet, so you're not going to supply the bank statements. Okay? Signed and dated equipment finance application. This is an application we will provide to you that must be completed. And that's all we need to do a review for under $75,000 in equipment, okay? But if you're trying to get a much more equipment, $75,000 more, then there's much more involved in doing a review. There's much more that's required by the lenders. First, we need an equipment quote. We need your current year's P&L and balance sheet, 6 months of business bank statements, 3 years business tax returns, or 2 years if you're 2 years in business, and your last year's P&L, your personal tax returns for 2 years, personal credit report, and signed and dated equipment finance application. So obviously you can see there's much more involved. There's more review process when you're trying to get a much more greater amount of equipment financing, okay? But this, we're doing this video so you're educated, so you know, okay, this is what's going to be expected of me when, let's say, if you know your equipment's under 75K, there's less required, whereas if you're going over 75K, there's much more documentation you're going to need to provide to us. So how do you start this pre-qualification review for equipment financing? Well, the first thing is you want to order a copy of your personal credit report. Go to triadcreditreport.com. And then you're going to download it in PDF format. Make sure it's a PDF format and download the full report. We don't want to see a summary report. We don't want to see a snapshot of your credit score. That doesn't tell us anything. We have to do a full review of the full report. The second thing is once you do that, go to step 3, is you're going to go to businessfundingreview.com. This is very important. You're going to fill out that pre-qual form, but in the drop-down when it says what funding product are you interested in, select equipment financing, okay? If that's what you're trying to get a quote for, select that, okay? Upload your report. When you select that and submit it, it's gonna be received by us. We're gonna then email you out the equipment finance application and other docs we need to do the quote, because we're gonna ask you to complete that equipment finance application. We're gonna ask you for your equipment quote, okay, and your 4 months business bank statements if you're in business, you know, for more than, you're not a startup. If you're not a startup, you need to give bank statements. If not, you don't, okay? So once you send those back to us, then we start the review, okay? And that review takes 24, 48 hours. And now how does it, once we come back with a quote for you, we quote you what the loan amount is, here's the payment, you're ready to go, and then we send you out the actual agreement so the lender can arrange to pay your vendor, etc. So the whole process takes about 14 to 20 days, okay? That's equipment financing for you. And now, if you're looking for more products that we offer, definitely check out our business credit building system. That's our DIY system, or DIY system, where you do it yourself. And that's at businesscreditbuilders.org. And we have other funding programs as well, such as business credit card funding, loans, lines of credit. So definitely give us a check out there. With that, if you found this information helpful, give us a thumbs up and click subscribe if you're not subscribed already. That way you're notified every time we put out a video on different funding products, ways to scale your access to credit and capital as a business owner or a real estate investor. So with that, make it a great day. We'll talk to you real soon.